Hello and welcome back to the Dukascopy Studios here in Geneva. I'm joined today by Bjorn Martenson from Black Pearl Capital. So Bjorn, welcome to the studios.
Thank you very much. Great to be here.
So we've seen China's market turbulence shock the global markets. Has this had an immediate effect on Hong Kong real estate?
I guess the immediate effect for all of us was a bit of a gut-wrenching feel and reminders of 2008. In the meantime, I think we've relaxed a bit and it seems the market has gone into a bit of a holding pattern with less transactions at the moment.
And some figures say that Hong Kong real estate is expected to drop by 15%. So what's your opinion on this?
I guess we read the reports as well and we look at it. We know a lot of these are based on just purely grade A markets or residential markets. If you're looking at our specific area of expertise, then we're actually in the middle of two deals right now with very mixed reactions. We have one transaction where we made an offer and the owner has come back to us and said, stock market crash, I think my property is now worth more as a diversification asset and has increased the price on us. And in another example, we're under negotiation on one property where we believe it's a distress sale opportunity where somebody has illiquidity problems due to the market crash.
And what kind of different market dynamics are you seeing in different areas of Hong Kong?
I think you have to split into the three main segments really. In residential, you have a largely overinflated market for a long time. You have a short supply, although there are many new buildings coming online. If we look at it from a practical sense, friends of mine in Hong Kong are a dual income couple with no kids, doctor and a lawyer. They can't afford to buy an apartment in central Hong Kong. They're priced out of the market by institutional investors essentially. So if the market is going to have a correction, which probably it should, is it a doomsday correction where the bottom falls out? I don't think so when you have affluent people ready to step into that market who would like to live in those areas. In terms of the retail area, the impact has been felt already. So China has slowed down. A lot of Chinese consumer spending happens in Hong Kong, luxury goods, etc. The rental rates on retail are linked directly to the turnover, so that has immediately had a correction. For our area, we're more into the commercial space. And if we have a look at the areas of Hong Kong, you can see Hong Kong Island with Kowloon as your main areas that international investors focus on. We've been focusing on an area slightly outside of Kowloon. And it's an old industrial area, and we look at value investing. This is an area with low leverage, fairly low yields, but we've been able to double those yields by having a good local management team, by increasing the availability of units to small businesses. From a price perspective, if you look at the areas in red in central Hong Kong, you have grade A offices $60 to $120 per square foot. In our yellow area in Kowloon, with a lot of new development, you're looking at between $40 to $75 a square foot. In our area here in the green called Lai Chi Kok, we're renting good office space for $10 to $20 per square foot. So if there is an economic squeeze, we believe tenants will be more looking towards these areas. So again, be wary of reading just reports and what the market is saying. I think pick value investments, go for long-term investments with low leverage, and that's our strategy for Hong Kong.
And finally, what impact do you think this could have on the rest of the economy?
I think in a lot of ways it might be how the rest of the economy impacts the real estate market. The main trend we're looking at is interest rates right now. Given that the rest of the economy might be slowing down, we believe interest rates will be kept low for a while longer than perhaps anticipated. This keeps the cap rates low, which keeps the eventual value of the market quite high. Whether that continues, whether real estate is continued to be seen as a diversification asset, or whether indeed there has been a bubble, we will have to wait and see.
Fantastic. Well, Bjorn, thank you so much for sharing your expertise with us today.
Thank you very much for having me.
And thank you for watching. For all the latest Dukascopy updates and interviews, do keep clicking back. Goodbye for now.